Good afternoon, everyone. I'm going to give everyone a couple of minutes to start signing in and get their audio situated, and we'll just we'll hang out for a minute while everyone logs in. I love to watch that number tick up. We've had a good response to this topic, so I'm really looking forward to hear what everyone has to say, and I hope you all enjoy it as well. So as people continue to log in, I'm just going to start by saying welcome to the 2020 CDFI Friday series. I'm Colleen Ryan. I'm the Consulting Executive Director for the New York State CDFI Coalition. And for more than 2 decades, this nonprofit association has been the organizer and catalyst for important initiatives that help CDFIs and the communities they serve. This 2020 CDFI Friday series of webinars was supposed to be an in-person conference, the 11th annual, with the theme New York State CDFIs Collaborating for Impact. But even though we can't gather in person this year, we're still delighted to welcome so many of you to this online version. Allow me to take a moment to thank the Board of Directors of the New York State CDFI Coalition, especially the panel coordinators for the housing panels, Karen Haycox and Howie Banker. I really appreciate their support. I'd also like to thank our sponsors for their understanding as we made the move from traditional conference to online event. We're grateful to JP Morgan Chase, Wells Fargo, M&T Bank, Amalgamated Bank, Capital One, B&B, Citizens Bank, Community Preservation Corporation, Hanover Bank, Ponce Bank, TD Bank, Valley, and Wood Forest National Bank for their support. So today, and on several Fridays to come, we will gather with supporters from around the state to share ideas, learn about the latest lending and program innovations, and enjoy the company of people with a shared passion. We have a couple of options for Q&A at the end of this panel. You can either use the chat feature built into Zoom, or if it's easier for you, just send your question to info@nyscdfi.org. You can feel free to send questions throughout the talk, and I'll do my best to get to as many of them at the end as we can. If you're not already a member, please consider joining your colleagues from around the state and help the coalition develop its agenda for 2021. With a track record of some 4 decades of providing capital to low-income communities, we have a legacy of success to draw upon. And as the necessity of our services becomes more evident than ever, we're looking forward to working with you to keep up with the expectations of our clients and the needs of the underserved. We are so delighted to welcome our panelists to discuss how community land trusts preserve affordable housing. Local real estate markets are in flux because of the pandemic and other reasons, and people who have lived in the same neighborhood for years are being pushed out by teardowns and skyrocketing rents. This panel will explore how community land trusts help preserve affordable options for all. Before we start with the presentation, I'd like to ask each of our panelists to introduce themselves, starting with the moderator, Lisa Giordano. Lisa?
Good afternoon, and thank you, Colleen. Really happy to be here and have this conversation today. I'm a lifelong resident of the Capital Region, going to school at Union College and then moving to Latham, New York, where I have lived now for the past 25 years. I've been fortunate enough to have a career in banking that has spanned over the past 30 years, starting with Key Bank right in downtown Albany as part of their Management Associate program, and then working with such institutions as Cahoots Savings Bank, Citizens Bank, and then also having a little derailment in working with Trinity Alliance of the Capital Region. And working with Trinity has allowed me to come full circle back into my position at Citizens Bank as a community development market manager, utilizing those strengths of banking and community work. So I work in all of New York State on CRA, affordable housing, mortgages, home equity, small business lending, and volunteerism through financial education. I've been doing that now for the past 7 years, and I'm happy to be here today. Thank you, Colleen.
Thanks, Lisa. How about Susan? Could you give us a brief introduction?
Yep, I'm Susan Cotner, Executive Director of the Albany Community Land Trust.
Excellent. And Linda?
Good afternoon. I am Linda MacFarlane, and I'm the Executive Director of the Community Loan Fund of the Capital Region. We are a CDFI focusing on loans to minority and women-owned startup businesses, and also funding nonprofit organizations that service low-income census tract areas. I'm also the executive director of the Albany Center for Economic Success here in downtown Albany, which is incubator space for minority and women-owned startup businesses. In addition to the CDFI and incubator work that I do, I sit on several community and economic development boards, including Affordable Housing Partnership with Sue Cotner's organization, the Capital Region Economic Development Council, and I am the current board chair of the New York State CDFI Coalition. I'm very pleased to be here today to talk about the importance of community land trusts, and in particular, the value that they bring to low-income communities and how, as a CDFI, the Community Loan Fund is able to finance them. Thank you.
Thanks, Linda. And Rachel, could you give a quick introduction?
Hi, everyone. My name is Rachel Wieder. I work at New York State Homes and Community Renewal. Director of Special Initiatives is my role, which encompasses working on certain programs within the State of New York Mortgage Agency, the Affordable Housing Corporation, the Office of Faith-Based Initiatives, and the Office of Community Renewal. I've been with the agency for about 3 years, and prior to that, I worked at the Governor's Office of Storm Recovery.
All right, well, I'm going to mute my video and audio for the time being and let Lisa take it away with questions. Lisa, Sue does have a PowerPoint to share with us, so I'm sure that will take us kind of right at the beginning. So if you want to give us a start, Lisa, we'll get underway.
Yeah, thank you, Colleen. And thank you, everyone, for joining us on how community land trusts preserve affordable housing. As Colleen said, as urban living becomes more attractive to the affluent, people who have lived in the same neighborhood for years are being pushed out by teardowns and skyrocketing rents. Community land trusts can help preserve affordable options for all. We're going to turn it over to our panel of experts right now, and I'll be asking a series of questions, and they'll have the opportunity to each respond to those questions. The first question is, how do land trusts acquire and hold land for the good of the community? And with that, I'd like to start with Susan.
Great. So I am going to try to share my screen just to give you all a sense of what land trusts can do, just to start off for a minute, and then we'll go from there. So again, thanks for inviting me to this presentation. I've been with the Land Trust since 2020 and, or 2020, 2000. Oh my gosh. And before that was with Capital Affordable Housing, an arm of the Affordable Housing Partnership, making mortgage loans to land trusts. So I've known about them for a long time. So I wanted to give everybody just that real basic slide on what are land trusts, the basics of it, and then get into to Lisa's question. So again, key point, land trusts are really not your top-down policy tool. They are definitely a community-driven organization and approach to affordable housing. And really, they are working to create permanently affordable housing, right? There's a lot of community wealth that is created not necessarily by that individual or by that property, that building, but by the community as a whole. And that, again, is kind of driven by demand for property. So that's kind of where that gentrification and the new higher demand, which is driving up prices. You know, the other, oftentimes, when you think about community influenced pricing on property, you can think about the public investment in locations. So for example, you think a classic place to locate a land trust might be around a brand new transit stop, where all of a sudden, because of public investment, there's a lot of new property value that's being created as a result of that public investment. How can the community control the use of that land so that it remains affordable to the residents that have been living there? So land trusts go about this way to manage and control land and the pricing of land and the affordability of it through a shared equity model, again, to increase ownership opportunities and with the whole concept that any kind of subsidy, any kind of publicly created wealth in property is available not only to that one first person who buys there at an affordable price, but for future generations as well. Some land trusts also provide affordable rental housing like we do in Albany here, agricultural land, whether it's urban or rural agricultural spaces, commercial space for community purposes, co-ops, land conservation. So there's a lot of different models out there. The tool that we use is to really separate the land from the building. And then the relationship with the building owner, the future home buyer, is governed by a 99-year ground lease. And that ground lease is renewable, right? So it outlasts every single one of us and really gets extended as people sell their homes and that ground lease is renewed now with the new buyer. That tool is used to really capture the development subsidies that were used to make that housing affordable. And it's really captured through resale restrictions. And it usually involves two things. One, asking that the family agree to sell the home to another income-eligible family, just like they were, and also to sell it at an affordable price. And I'll give you an example of that in a minute. So again, it's a complicated tool, and it's sometimes frustrating that to make housing permanently affordable, often serving the lowest income families, you have to complicate the real estate transaction in this way, but that's what is how it's set up. But the key thing again is that it is community driven, right? It's the neighbors, the community members who are agreeing that yes, it's right that we keep this an affordable housing use or whatever public purpose we might choose. And that we agree that we want to be able to pay it forward. Just as we've benefited from the affordable housing restrictions, we too want it to be available to the next generation of home buyers. So let's answer Lisa's question. How is it that properties are being acquired and what and how can we keep them affordable? Again, through the land trust model, it is that the ground lease concept. Right now, the Albany Land Trust is acquiring properties through donations from municipalities. We have had Citizens Bank, for example, donated a property to us that had been foreclosed upon. We have private individuals who, as part of their I'm forgetting what the term is that I want to use. Private individuals are agreeing to basically give properties to the land trust as part of the way that they manage their estate planning is what I was trying to get to. But the land trust in Albany also is doing a lot of low-cost acquisitions through the Albany County Land Bank, for example. And through private owners. So these two properties are across the street from one another on 3rd Street in Albany, and we have really taken a very targeted approach to working on blocks to try to rebuild values. So whereas many land trusts are in very hot markets, and that's what Lisa was pointing to in terms of kind of the renewed and interest in urban living. We've been working in neighborhoods where it's almost the opposite, where there's been a ton of disinvestment. And so our goal of our community land trust has really been to help rebuild neighborhoods and prompt more reinvestment in communities. So we've been using the land bank and all these different acquisition methods in order to obtain properties. So Lisa, did that answer your question? Do you want me to stop sharing and then you can move on to your?
Yeah, thank you. That was great, Susan, and I appreciate your insight and all that information around the work you're doing. I did want to turn it over to Linda and then to Rachel to also respond to the question, how do land trusts acquire and hold land for the good of the community. So Linda, why don't we start with you?
Thank you, Lisa. As a CDFI, we focus on making loans to the community land trusts in order for them to acquire the property. The land trust then will typically rehab the building and either rent it or sell it to an income eligible family or individual. From a lender's perspective, when I am underwriting, I am looking at the cash flow of the building, particularly when it's going to be for a renter. I look at it as if it is fully rented. They can be a one family or possibly a two family. The loans then are structured over a 20-year amortization period to keep the monthly payments low. And generally, because these units are to income eligible, typically low income individuals, we want to keep them affordable. The monthly surplus of funds from rent that is coming in minus all expenses on the building is fairly low. We know that, we expect that. The profit to the land trust can be maybe as much as $150 per month. So that is not a lot, particularly if you're considering repairs are going to have to be done on the building at some point in time. But what we do is we focus on a low interest loan to the land trust. We currently are making these loans at 4.25%. We're having them long-term because we believe in the mission of the land trust, and they align very closely with the mission of the Community Loan Fund and as a CDFI. Thank you.
Thank you, Linda. Rachel, do you have something to add, please?
Hi. Sure. Thank you for inviting me to join this discussion today. I'm glad to be here to make sure everyone working with CLTs understands and has an opportunity to ask questions about the resources available through HCR for the development of CLTs and for home buyers and CLTs. We have numerous programs from the State of New York Mortgage Agency, which can provide financing to home buyers and CLTs. And we also created, through a subsidiary of Sunny Mae a few years ago, we created the CLT Loan Fund, which awarded 3 CDFIs the funds to be able to help CLTs in some in lots of different ways, from acquisition rehab, purchase of land, down payment assistance, closing cost assistance, in rehab home improvement work. So that's all underway now, and there's a lot of sort of different uses that those funds are being used for. We also have some of our regularly funded state programs that are available for CLTs. The Affordable Housing Corporation can provide grants up to $40,000, and this can be for acquisition rehab, down payment assistance, home improvement. There's this sort of neat example that I wanted to bring up today of a CLT that has accessed a lot of different programs through HCR, and that's the Long Island Housing Partnerships CLT. Starting from actually when I worked at the Governor's Office of Storm Recovery, we had acquired storm damaged properties and gifted them to the Long Island Housing Partnership CLT. There was 21 that were where title was transferred at no cost. And those properties were substantially damaged during Hurricane Sandy and needed major repairs and to be elevated and in compliance with local floodplain regulations. And I've sort of been following these properties and their CLT through my career, ironically, and now working at HCR, those properties have touched a lot of these programs I've mentioned. They have received rehab assistance and down payment assistance through the AHC program. They have received closing costs assistance through the CLT Loan Fund through Sunny Mae. And we are actually about to approve our first borrower who's buying one of the CLT properties in Sunny Mae through a pilot program called Give Us Credit, which is aimed to increase Black home ownership and is a new way of looking at the traditional credit score and sort of looking beyond, looking more comprehensively at someone's ability to pay in sort of varied sources of income. So it's a change to our underwriting that we've launched on a pilot basis in New York City and Long Island to start. And we have our first applicant that looks like they're going to be approved in that CLT. So very interesting sort of example about how that CLT has accessed a lot of different resources, and we continue to support that work. And I'm happy to be here to sort of help navigate through all that. Thank you.
Thank you, Rachel. And thank you, panelists, for answering the question. We certainly have programs and opportunities for land trusts to make a significant impact in our community. And in sharing some of the examples that you mentioned, it leads me into the next question, which really focuses on how do land trusts help the low and moderate income families build their equity and their financial stability. And so, Susan, if we could turn it back to you to start and reply on that question, please.
Yep, so I'm going to share my screen again to try to give you a good example of how that works. Let's see here. So again, the home buyer, when you're thinking about home ownership, they're buying the building only, and they enter into that 99-year ground lease with the land trust. Basically the home owner, the way we've been setting it up is that they benefit from the development subsidies that we've brought to the table. Again, those resources that Rachel just mentioned. In return, they agree to sell it at that restrictive price. So how do we do that? We do it through a resale formula. And we've set it up in Albany, and there's several different types of resale formulas, but ours is based on an appraisal model. And so we take a look at what the original appraised value is. So easy math here on a Friday afternoon. The house is worth $100,000 when it's been repaired and occupied. At the time that that home is sold, the value of that home may have increased to $120,000. Again, it might be a combination of reinvestment into the home from the home owner, but most likely, again, it's a kind of those development pressures of increased prices and increased demand for good quality housing. So that $20,000 difference, that's the appreciation that gets shared with our homeowner. And the way our formula works in Albany is that that family gets a 25% share of that appreciated value. So if you look at the right-hand side of this slide, that family bought the home for $90,000 when they originally purchased it because we were able to pass through some down payment assistance as part of the subsidy. Generally, again, we're buying homes, rehabbing them, and then selling it affordably. So that $90,000 is what their contract price was. And with the increase in the appreciation that their share of it, $5,000, they can turn around and market it for sale for $95,000. It's an oversimplified example because they and can obtain all their resale costs back. So in terms of using a real estate agent to list it and that type of thing, all those things can get factored into what that resale price is. But again, just for the sake of the example. So it's not that the land trust is getting all that equity or wealth back. It's really embedded in and remains in that property to keep it affordable. So instead of a house that's on the market for $120,000, possibly out of reach for a lot of low-income families, it's on the market for $95,000 and affordable to others. So again, that family that comes through will be also asked to enter into a ground lease with the land trust community, and again, that becomes kind of the price that we build off of with our new ground lease that we share with that family.
Thank you, Linda, and thanks for simplifying that example. It was very clear and sounded great. Linda, can you add to the conversation around building equity and financial stability for the low and moderate income population?
Yes, I wanted to include, in addition to the down payment assistance that Susan had mentioned, community purchases. The land trust purchases are, or mortgages are really combined with a lot of financial education, financial literacy for the homeowner. And the second point is, in addition to having a better understanding about what home ownership means and building equity, we have found that typically mortgage payments for these homes are less than what the family had been paying in rent. So it allows not only the family to build equity in the home, but also to start building their savings, which is very important. And combining that increase in monthly cash flow with the financial literacy helps people on their savings. And as you know, home ownership comes with different types of repairs that have to be needed, but it helps allow the individual or the family to set money aside for when repairs may need to be done on their new home. So I think that's very important. The other part where the homes are owned long-term ground lease by the land trust, it allows for the homes to remain affordable. So as the homes are passed possibly from generation to generation, it allows this to be, instead of multi-generational poverty, it's a path for multi-generational homeownership, equity, and wealth, which is critically important and why we're a firm believer in this model. Thank you.
Thank you, Linda. Often individuals don't think that they can own a home because they think it's too expensive. So sharing that information about the difference between home ownership versus rent is very enlightening. So thank you for sharing that. And Rachel, do you have an example or a comment to add to the equity and stability question?
I don't think I have an answer to the question. I think it's a really good question. I guess I'll just say that in we're working for a mortgage agency that provides home ownership to first-time home buyers. I'd say that having a variety of options available to people, CLTs and other options included, is great. And it's buying a home in a CLT is a great option for first-time home buyer, and as Linda and Susan said, it remains affordable, which is very important, and so we continue to support that work.
Great, thank you. Moving on to our next question, we're thinking about and focusing on elevating the game and ensuring that our low and moderate income folks are looking at the opportunity to own homes, to level the playing field. So how do land trusts assist to level the playing field against such things as gentrification and speculation? So if you could start with that, Susan, that would be great.
Yep. So again, I think what's happening in the market now is that you're seeing that folks are finding it very difficult to find affordable homes like this and to be able to access them and be competitive. If they're walking out onto the market and they've got a complicated financing scenario, you cannot compete with the cash buyers that we are seeing inundating the capital region right now. So by having an established organization like the Land Trust that can rely on our CDFI financing partner at the Community Loan Fund, we're able to very competitively bid for these types of homes that are definitely the kind of residential housing opportunities that Land Trust home buyers are really looking for. I do want to just mention that another way that we help with kind of helping families build wealth and stability is in some of the affordable rental housing that we do. We've had tenants living with us for probably 25 years and have been able to, because they've got affordable, good quality, stable housing situations, but just choosing not to buy, they've been able to really manage their financing well, just as Linda said, and really help them build wealth and stability to the point that they no longer would be income eligible to get any down payment assistance. They're at 120% of median income at this point in time. So I do want to mention that the Land Trust in Albany in particular really does see kind of the two needs, the affordable homeownership programming need and the ability to build wealth through equity, and that you can capture again from resale, but also that long-term, affordable, good quality rental housing that allows families to have very stable rental situations. So again, the financing that we get from the Community Loan Fund has really been critically helpful to us, and again, just a great partner because they're so easy to work with, and they're so familiar with our programming that it's just been a huge help for us. For those of you who are interested, I'm going to get into a little bit into the weeds in terms of the Sunny Mae homebuyer financing, which is a fabulous product. We're so happy that the state has been open to land trust financing. This is something that banks and other banks might require non-Sunny Mae lenders, just so that you're aware. There is a rider to the ground lease that gets executed when the family purchases the home and puts a mortgage on the property, and that is a rider to eliminate the resale requirement, so that if there is a foreclosure, Sunny Mae, another lender, is able to actually move forward with the foreclosure process and have those resale restrictions lifted. What doesn't happen is that it doesn't cancel the 99-year ground lease. That remains in place throughout the foreclosure process. What's happened in Albany in those situations where somebody passed away and it went that foreclosure path, we typically stepped in and repurchased the property so that we could preserve affordability and that type of thing. The appraisal is, again, kind of a key difference in terms of underwriting, whereas, you know, the customer, the family, the home buyer is underwritten to the same standards as everybody else. It's really the land trust model that's evaluated differently. And again, the appraisal is determining what that leasehold interest is, and it gets into this overly complicated, in my opinion, estimation of what the lease fee payment and the capitalization rate on that lease fee. So right now our families pay $25 a month for a ground lease fee, so there's not much of an impact in terms of how that negatively, if you will, reduces the value of the property. So I just wanted to share that quickly on financing. Here's an example of how the Community Loan Fund, the CDFI, has really been helping us quite a bit. This is a two-family property that we bought from the land bank. It was a mess inside, as many of you guys are used to seeing, you know, again, and it's just a testament to the chaos in families' lives in rental units and what happens when there's an eviction and a foreclosure, right? The land bank in Albany gets properties as a result of tax foreclosures. The property owner just walked away, basically. So we own it. The land trust is giving us construction and permanent financing for this rental property. We're also getting some home funds, some funds from enterprise to help make the units affordable. These three bedroom units will probably be rented for $800 to $850 a month, and that's what's really helpful in Albany in terms of rents. So to get to Lisa's question about fighting speculation, you know, again, I think it's really important that, I think more and more folks are recognizing the benefits to long-term affordability and the capture, if you will, of the development subsidies and the capture of the public improvements in values of land and that type of thing. So it's good to have an organization, a community-driven organization in place to be able to look forward and acquire properties in advance of speculation. So again, we were started 35 years ago or so, and at that point in time, there was some rumblings or beginnings of worries about speculation. That's when we got into neighborhoods to buy the most affordable properties that we could in advance of that, and again, help maintain that community control. So I'll leave it at that.
Thank you, Linda, and thank you for explaining some of the financing programs as well. And, I'm sorry, Susan. And Linda, moving on to you, continuing the conversation to talk about leveling the playing field against gentrification. Could you add some comments around that?
Yes, Susan, of course, is spot on with everything that she has been saying, but I just wanted to add that once the land trust has acquired the properties, they really have control over who purchases the buildings from them or who rents from them. The model is not set up to be grossly profitable, but it is set up to be locally owned. And it is also intended to be long-term, resulting in stable, long-term affordable housing, which is what a lot of these neighborhoods really need. Decent, affordable housing that's available for the long term. And that will help stop gentrification and also doesn't allow room for speculation. Thank you.
Right, good point. And lastly, Rachel, any comments around gentrification and leveling the playing field?
I think it's mostly already been said. I just say that, so much of what is produced in affordable housing has sort of regulatory periods, 30 years or however long, and then when they end, we're often sort of losing that housing stock in the affordable housing apparatus. And this is CLTs are such a great way of ensuring affordability from one homeowner to the next.
Great, thank you, Rachel. And moving on to our last question before we save some time here from the attendees for questions and answers. Can you recommend a model for starting a land trust? And I'd like to again start with Susan on this. Can you recommend a model that you feel would work, that's efficient, and that is really going to help our community members?
We, got started out of tenant organizing work at the United Tenants of Albany, and so that was a really important community base for us to work from. Over the years, we've really found that it has helped us to partner up with other organizations. So right now, again, the Land Trust is sharing staff with the Affordable Housing Partnership, which is more of a housing counseling agency and energy efficiency program and that type of thing. So, look for those partnerships. I know that that's the way a lot of land trusts are getting started now, out of existing kind of community development organizations. And I really do think that that's a great model to go with. And certainly connecting with the group Grounded Solutions Network is really the most important step to get really great resources and technical assistance in getting started.
Thank you, Susan. We have a few more minutes before we go into Q&A. So Linda, do you have some thoughts on how to get started?
Yes, well, I think my response is a little bit, once you've got a plan, taking a look at, as Susan mentioned, growing out of community need. One of the things I think important to look for is, we've looked at different models. The Albany Land Trust is a fantastic model. We have worked with Schenectady as well, with Better Neighborhoods, Inc. And one of the things that I think Albany does a bit of a better job with is having these homes in areas where there is other work being done, for example, by Habitat for Humanity. So you're seeing improved properties on a block by block basis instead of one unit, one house on a 2 or 3 block area. So it seems to make a lot of sense if the land trust is not able to acquire all of the buildings on a particular block or a street, to have them in areas where additional work is being done by other nonprofit organizations, so that the improvements come more in mass. I will mention, though, that once a model is identified, having a financial partner is critical. So community development financial institutions, CDFIs, are very well poised to be assisting with financing, both of the acquisition of properties for land trust, as well as some of the rehab and some construction financing. Realizing that there's not going to be a huge profit margin in this deal, that's why community CDFIs are particularly well suited for this type of work. There are other financing models, as we've discussed with Sunny Mae, once a mortgage is out there. Citizens Bank, of course, also has some options for this type of a model. But I think it's very important to get a good financial partner when you're starting to discuss what the land trust wants to accomplish in the areas where they are going to be doing their work. Thank you.
Thank you, Linda. And lastly, Rachel, any comments around starting a community land trust?
Just the example that I gave earlier of the Long Island Housing Partnership, and I'm sure staff there would be happy to talk with anyone about the various programs through HCR that they've used to assist the launch of the first properties in their CLT. And they are a housing counselor, CDFI and CLT, so similar to what others were saying, that combination I think could be helpful.
Great, thank you. So panelists, I want to thank you for your answers today, the thorough explanations that you gave around the questions that I put forth. And we do have about 15 minutes. So now I'll turn it back over to our host, Colleen. And Colleen, if there are any questions and answers that you have or from the attendees, our panelists will be happy to answer them.
Thank you so much, Lisa. We do have a lot of questions, and they run the gamut from real in the weeds, nitty gritty, to kind of overarching thematic questions. Just while Rachel was just talking about some of the different programs, for anyone who's not using the chat feature on Zoom, could you just give us a quick overview of the Give Us Credit program, Rachel, that one of our attendees had a question about?
Yeah, sure. So it's a brand new pilot program we launched about 45 days ago. So it's brand new. And for now, it's in New York City and Long Island, but we intend to offer it statewide. Basically, it's a change to our underwriting at Sunny Mae. We are looking at different ways to judge someone's willingness to pay on a mortgage. So not changing in terms of their ability to pay, the debt to income ratio. We want to make sure the mortgage is affordable to them, that we're not changing, but we are sort of looking at willingness to pay differently than the traditional credit score, traditional credit report. We're looking at varied sources of income. We know in a lot of immigrant communities in particular that folks are not necessarily receiving income in traditional ways. They're not necessarily using banks or trust banks in the same way. They were looking at if they've paid rent on time in the past. That's something that's not reported to the credit bureau that we look positively at. Sort of taking in, we made about 27 changes to our underwriting policy. So there's really a lot of, some I think, to be fair, we were running a little on the conservative side. And so some of them are getting us up to more normal. And then a lot of them are really quite progressive. And so we have to run it as a pilot for now. And we're going to sort of make sure that our delinquency rates are no higher than in our normal portfolio. We want to make sure we're setting up people to succeed. But yes, that's the program, and we're very excited about it. I think it's long overdue. And I'm happy to send folks links to information about that or let them know more.
If anyone does have questions for the panelists following this discussion, please just send an email to me or respond to the Eventbrite or Zoom, whatever connection you have, and I will forward it along. When Rachel was talking about underwriting and changing these parameters for underwriting to kind of, level the playing field, there was a nitty-gritty question for Linda, and that was, Linda, when underwriting acquisition loans, what is the collateral structure and what are the guarantees that you use?
Thank you. The collateral is the real estate. So if we are loaning money to the land trust, the collateral is going to actually be the real estate. So what happens is, though, we understand that the cash flow is not going to be as high as it is for traditional apartments or rental units, and we're very much aware of that, so we make those accommodations. What we may do also, though, is provide some construction financing so that the land trust can improve the property and then sell it to a designated purchaser who is income eligible. So again, we make sure that we're looking at it based on the affordability of the project and the stability of the land trust, certainly the experience. We partner with Sue Cotner's group quite a lot, and as she mentioned, they've been doing this for well over 30 years, and the loan fund is actually 35 years old as well, so we have a long-term agreement. But with that focus on affordable housing, we're able to look at the underwriting a little bit differently than traditional financial institutions would.
Colleen, I want to add that again, just a reminder to everybody that when the land trust owns the property and the building, right, it's fee simple. It's a standard kind of fee simple real estate transaction until the property is sold, the building only, to the home buyer. So just it's a very kind of a plain vanilla, construction loan to a not-for-profit. Think of it that way.
Well, actually, Susan, leave your mic open because I think this question may relate directly to that transfer question. Could the limited return on equity be a disincentive to owners who are considering upgrading or restoring their properties?
Yeah, so again, that's the beauty of the board being comprised of the community, right? Other homeowners are sitting on that board. There's different resale formulas. For the longest time, we've had resale formulas that allowed people to make capital improvements. They can't be luxury improvements. They can't put that hot tub in the backyard, but they can do the capital improvements and get a return on that as well. Again, so there's a lot of different factors that come into play. So we try to make sure that there's no disincentive to owners to continue to improve the quality of their home. And obviously by doing that, that influences that value of the property. So as the home is maintained and improved, so too will the value of the property, the appraised value, increase.
This might be just a clarification question, so I'm not sure who wants to answer it, but one of the first questions we got, and maybe it's been covered, is do land trusts make mortgages or loans to individuals?
So the Albany Land Trust is not in the business of making mortgage loans. Again, we've been glad to be working. Originally, we were working with CEFCU, a credit union that was making loans to individuals, and now we're relying almost 100% on the Fannie Mae financing program.
I am not aware of any land trust models where the land trust is actually making the residential mortgages.
Okay. This again is kind of a nuts and bolts or nitty gritty question. How does the land trust model differ from a cooperative? What do the transfer taxes look like, and is there a mortgage recording fee?
It's yes. So it's not a co-op. The family owns the building almost fee simple, subject to the ground lease. So the mortgage recording tax is based on the same thing as what their is a conventional fee simple, total fee simple deal would be. So there's really no changes in terms of the closing costs for that family, again, especially in Albany, where the bulk of the value of the property is the building itself. You know, we've got a lot of lots around Albany that are worth $3,000, right? There's not any value there. So yeah, the closing costs are all the same. And similarly, too, the family's paying the full property tax bill on the home as well. I think one of the issues that we're trying to work on statewide, right, is to make sure that we can get assessed values to reflect what that resale or restricted resale price is, so that the assessments are reasonable and affordable for the families. But all those, the costs of ownership are passed on to the homeowner, but they get all the tax benefits, you know, IRS tax benefits, and that type of thing as well.
This is kind of a dual question, I guess, for Rachel and Linda. Back in early 2020, the Community Loan Fund of the Capital Region got a grant or some funding from HCR, over $300,000. Could you tell us how you used it, how you worked together to disperse that funding into the community where it was most needed?
We're working with HCR on funding for our expansion project, our incubator expansion project. We did not receive funding coming in to go out in a grant format. So I think that is a little bit confused on the use of those funds.
Gotcha.
Well, I can speak to that, though, Rachel. I don't mean to interrupt, though. You know, the specific community land trust grant that Linda Chandler is working on, Linda, I think is what they're referencing.
Okay. Okay.
So there were 3 projects. The Albany Land Trust was a beneficiary of that, and we're using the funds to renovate a 3-unit brownstone on Clinton Avenue, a historic building. So we desperately needed that money. It's a huge, huge help for us. A much more expensive project than we're typically undertaking. I think the Schenectady Land Trust also received some funding for a couple of projects. Rachel probably can tell us better. And then there's a North Country Land Trust that got assistance too.
That's right. That covers it. The legislature allocated or appropriated $1 million to go to the Sunny May CRF. It's a subsidiary of Sunny May, and we use that $1 million to award 3 CDFIs. In the Community Loan Fund of the Capital Region was one. And they are in the process, and because COVID, I think, can slow down a little bit, but of dispersing funds to those 3 CLTs. So Albany, Schenectady, and the Giordano Community Land Trust.
Okay, well, it's 5 minutes to 1. The time has flown. I'm going to ask one more question and ask you all for kind of a summation. Obviously, we've talked about, we've talked about downstate, we've talked about Long Island, we talked about the Capital Region, you just brought up the North Country. Clearly, there's no cookie cutter solution. There's no one size fits all to the success of community land trusts across New York State. But is there anything that you could leave us with as far as trends or things that you hope for or things that you'd like to see in the future? You can go first, Rachel, since your mic's open.
I would say more of this, more, obviously from my perspective, I want to see more access to the existing programs that we have, more use of them in CLTs.
And Linda or Sue?
I was trying to unmute. One of the things I would like to see, Susan alluded to this, their most recent project is a property that was acquired from the Albany County Land Bank. There are a lot of properties in and around the Capital Region that are in complete disrepair. They've been abandoned for a long period of time. A lot of them have those big X's, red and white X's on them. And having different avenues of partnership so that we can get the buildings rehabbed and affordable home ownership in them, or even with mixed use properties, I think is critically important for community restoration. So having land trusts be able to continue to partner with land banks or with other groups that are holding this real estate, and sometimes it's the municipalities, is very important. Thank you.
Yep, it's the funding. It makes all the difference, you know, again, to move forward. You know, one, the public support for the concept of community land trusts, as Rachel said, just getting the word out about this model and how it works, and that it is something that we should, you know, be really thinking about, is how to make housing permanently affordable, and that's an acceptable method of doing it. The land trust is a great model for doing that. There is, you know, kind of a specific thing, as New York State has this great participation loan program, and I think that would be a great program for more CDFIs to participate in, because it combines financing plus grant funds from New York State, and that could be a hugely helpful model for us to get to scale in terms of, again, rental housing, which, again, huge need for in our community. But also helps build up a portfolio so that we've got a solid income of net operating income coming in as well. So
Great, thank you. Well, I think the lesson of today is, you know, the theme of the New York State CDFI conference, collaborating for impact, is really clear that that's a good mode for us to follow. You know, working together, we can really help advance this cause. So I really want to thank everyone for being part of our CDFI Friday series today. I want to thank Rachel and Linda and Susan and our moderator, Lisa, and the board of the New York State CDFI Coalition. I hope you'll be able to join us for one or more of our upcoming events, including Legacy Business to Worker Cooperative on October 30th in 2 weeks, and Cybersecurity for CDFIs on November 6th. You can find the full list of upcoming events on our 2020 conference page on our website at www.nyscdfi.org. So thanks again for your participation. Have a great afternoon. Stay safe and be well. Thank you.
Thank you.